Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is Trading the FOMC Minutes. Today, we're going to go ahead and preview the FOMC Minutes, what you can expect for about an hour from now. This is going to be a big release. The number's going to drop. We're going to see exactly what it's like in that FOMC boardroom, and we understand a couple of things. Number one, conflict breeds uncertainty. Uncertainty breeds volatility, especially in the Forex market. So we're going to have to go ahead and dive into that. There's a lot of action. I mean, the fur is already flying with the FOMC. We've got a criminal referral to an FOMC member, a Fed member, on the Board of Governors. I'm watching that relatively closely. We're going to talk a little bit about some mortgage fraud allegations right now in a move to get one of the FOMC members to step down. It is a full court press right now to get the interest rate cuts at all costs. At absolutely all costs. So I'm definitely going to welcome everybody back. We got a lot to cover. We got some trade ideas that we need to go over. We've also got that Kiwi. We've been watching the Kiwi relatively closely. We've got a situation there with the RBNZ cutting interest rates, and now we have an opportunity potentially to trade the Kiwi from a very, very strong level. We had a beautiful retracement zone that we nailed last month, absolutely crushed that trade. Now we've got another pretty good one coming our way, and it's only like 100 pips out, so I'm watching it relatively closely. So good to see everybody back. T. Marina, good to see you, T. We got a full house in the trading room here. Let's see, Andrea Gorwal, good to see you. Andrea, Bobby Bob, Dragon, Tuku. Let's see right here, Dave F19, good to see you, Dave, and Lita, always a pleasure, Lita. Let's see, Bobby Bob having a live trade on sell on USD JPY, and the Great Britain pound USD should close down for FOMC. Well, I mean, potentially, yes. Potentially, we could see some big volatility. FOMC minutes are a little bit tricky, though. Remember, this isn't an engagement from the Federal Reserve. Jay Powell is not going to come out and talk to you. They're going to issue a written statement. That written statement is going to take time to digest. So remember, when you're trading the FOMC minutes, give it a little while. Give it 15. Give it 20. Start looking at the headlines that come out. But I'm going to tell you the headlines before they ever come out. This is all about dissent. This is all about everybody in that boardroom really starting to knock heads. There's a couple of reasons why. We're going to talk about that in a little bit. But remember, they're looking for a replacement for Jay Powell, and it's the one that says they're going to cut interest rates the most. That's more than likely going to win that contest. Folks in that boardroom, they all want to be chairman. I don't care what anybody says. They're all ambitious people. They want to be a chair. There's a couple of nominees in there. They're talking rate cuts, and they're talking rate cuts big. I'm watching this closely because a lot of times it's the pressure on the outside of the boardroom that really dictates what happens on the inside of the boardroom. So that's really what we're looking at. Let me see, David. So David Diak. Hi, I'm not English, but I'm asking you how I can. Do you think this news will be positive for the dollar? No, I don't. I think it's going to be negative for the dollar. There's going to be a lot of rate cut talk in this release, and I expect the dollar, it's already sliding today. I expect it to slide more. I really do. I see rate cuts coming. Let me see. We've got a comment here from Andrea Gorwell. Good to see Andrea. I'm confident the trading's going well. Let's see. Hi, Shane. Nice gold buy on the 4-hour 920 this morning. It was also at the 62% support level. We will take a look at gold. Man, we haven't got anything out of gold in a long time. We're waiting for a move. War, interest rates, those are the things that typically drive it. Ahmed, good to see you, Ahmed. All right, guys, let's go ahead and get on with the program here. We got a lot to cover, long ways to go in a short time to get there. So I apologize. I do have a tendency to talk fast. So if I miss one of your questions, be sure to ask again. I get lost sometimes. I get lost in my old age, and I forget to answer. No, I will answer everybody's question in due time. Just let's roll through some of these fundamentals. They're key. There's a lot of news events out today. There's a lot going on in the markets. Great Britain pounds in play. Canadian dollars in play. Euros in play. We got to look at all these things. We had CPI numbers come out during the U.S. overnight. We also had the RBNZ getting involved with the rate cut. So we got a lot to chew on. Let me see, Cyril. What is the view about the Dow Jones for now? This meeting minutes. I think you'll see a rally in the Dow Jones. That's my opinion. Right now, we're printing right around 45,000. That's a big-time zone. I'll go ahead and pull that up, that US 30, in just a little bit, and I'll give you a look at the technicals. But it looks to me like we've got potential breakouts brewing in gold and in the Dow Jones, and I think they're both bullish, and they both come on the heels of rate cuts, and we all think that it's coming. Ahmed, Bitcoin is already shaking. What do you expect with this report? Because it will fall a little bit from my trend line. Yeah, I mean, Bitcoin is definitely correcting. 114,000. I'll pull up Bitcoin as well, and we'll take a look at the key technicals all in about a half hour. Gordon Williams, good to see you, Gordon. All right, guys, here we go. What about gold? I'm going to tell you about gold, Hassan, you bet. All right, guys, welcome to the Switch Markets community. We've got How to Trade and Switch are coming together to form a powerful community of traders, to answer questions, to help trader development, and also to give everybody a place to go. I know that active trading can be lonely. It can be lonely. It can be difficult. You're definitely going to want to join us here on these daily live streams. We try to do as much as we can to support trader development. That's what this is all about. And always remember, you can reach me at howtotrade.com. Go over there, send me a private message, and I will answer you in short order. All right, guys, RBNZ interest rate decision. You can see that was during the overnight. We got the big rate cut. We expected the rate cut, and we got it. So NZD, USD, nice big pullback here on the monthly. We broke beneath last month's low, and now we're starting to trend a little bit to the south, to the bear. And what you have here is we're off roughly, what about 1% today, something like that? Yeah, just right at 1%, 1.05%. So for me, the support zone is going to be right there, 57.26. That's a key level. That's going to be our trade update for today. You can see that we are definitely looking at a big-time reversal. It's happening right now. We're watching it develop in real time in the Kiwi. We're looking at that next support zone, which is going to be right down there. I don't trade 50% Fibonacci's. I trade 62% Fibonacci's. We're looking right there, 56.25. I'm going to be very aggressive there, probably 57.35s, not 56.25, 57.35s. More than likely is where my bids are going to be. I think it's going to be an interesting session. What to expect? Well, Shane, that's still about 100 pips down there. Don't worry. The FOMC minutes could definitely take us there, or they may not take us there. It really all depends on what exactly is in the verbiage and in the text of this big-time event. Let's see, right, our trade update, Canadian CPI and U.S. CAD. We put this one out yesterday. We're really just a real basic trade idea. What I do is Fibonacci retracements. If you're not familiar, go ahead and head on over to the How to Trade trading room. Watch the Fibonacci Counterpunch series. It'll give you a good idea of how I like to trade Fibbies. But this was just a basic trade idea from about 140.17. Right now, we're right around 138.68. This is a big-time resistance zone up there right around 140. I'm going to be hyper-aggressive there to the short more than likely. It just depends on when we get there. We had a couple things that came out today. We had crude oil. Crude oil came in with a big-time draw. I'm going to talk a little bit of crude here in just a second. But this is another one that's on our radar. This dollar CAD we're watching very, very, very closely. Very, very closely. So a lot going on today, guys. I'm already getting behind on the live chat. Let me see. It's also my view about 45,000 Sura. Yeah, I think this 45,000 is the key for the US 30. No question about it. We'll look at that one in just a second. How long until the release, Baal? It's going to be out in about 53 minutes from right now. So we're going to get you prepped up and ready to go way ahead of time. You've already got two key levels to watch in the Kiwi and the CAD. So you definitely we're off and rolling. We'll look at gold, US 30, all of it. Let me see. Roman, should I buy Bitcoin near 112,000? I can't tell you what to do, Roman. I can't tell you what to buy. I'm not a financial advisor. I don't work for Edward Jones. They're right across the street. I guess I could go over there and go in there and get my certification. That'd probably take about a half hour to do. But no, I'm not gonna. I can't give you advice. I tell you what I will do though. We've got the Dow 30, we've got gold, and we've also got Bitcoin on our radar. So we're gonna go ahead and look at those three markets here momentarily. Yes, sir. Good to see you. Yes, sir. T Marina, 2 p.m. Eastern. Absolutely. That's gonna be 12 o'clock my time. 52 minutes from now. Let's see, Ajay Patel, NAS 100. Yeah, let me get a list going. So we've got US 30, Bitcoin. Let me see, what else? US 100 and gold. We got to look at gold. It's not a party without gold. And we've got a bunch of other markets to look at too as well. All right, guys, here we go. This is what we're looking at for today. RBNZ, UK CPI, EU CPI during the overnight FOMC minutes coming out right now. This is the news of the day, the CPI right there. Great Britain pound sort of in an interesting position. You got CPI came in at 3.8%. This is inflation. We're talking inflation way above expectations. We expected inflation to come down a bit. And what happened? Bigger than life, it comes up. That's not good. That's no bueno. If you're in the business of really cutting interest rates like most of the world is right now. Euro right here, CPI 2%, came in flat. So much better reading in the Eurozone than in the UK. That's not good. And crude oil inventories as well. We're going to circle back around to that in just a second. Great Britain pound USD. A lot of folks were on the sort of the short side, Great Britain pound Japanese yen. A lot of folks were on the short side of this market. Not a bad play. Not a bad play, but the big problem was you had that CPI number, and you can see we're starting to stagnate right around that 38%. We've driven just a little bit lower here on our weekly time frame. Now we've got sort of a 50% retracement and a 62% retracement. Now, one of the things that we've been working with lately is trend lines. I've got a lot of good feedback. Euro USD, we're going to look at in just a second, that trend line. But you can see we had a lot of bears in the market today. So why did we see the sell-off in the Great Britain pound Japanese yen? Now remember, theoretically, CPI comes in hot. What does that mean for the currency? It means you're looking at raising interest rates or at least holding them higher than longer. And what do we got right here? We've got sort of a correction going. So if I'm interested, and I am interested right now in the Great Britain pound Japanese yen, how would we be trading it? I'm watching that long-term 38% relatively closely, but I have to say that I probably would wait for a deeper retracement somewhere down around 197.09, maybe 197 and a quarter potentially to get long. I think that's probably your bid. So for right now, I would be on the sidelines like most of the time. I'm always in wait mode, but let's go to the 4-hour chart and see exactly what we have here, if it ever pulls it up. And there's your dump. So that right there went down, really creamed our level. So if we do get established back up above 198.30, that's probably your bid for your short term. But right now we're about 198.04, so we're in an interesting position. If we do fail and rotate back up above that support zone, I would definitely be looking to go long here. But if not, well, that's just sort of the way that it develops. That's the way the cookie crumbles, and we wait for one of those deeper retracement levels that I just talked about. All right, let's talk trend lines here. Euro USD. Go ahead and talk trend lines on the daily. Interesting stuff, huh? 4-hour chart. There's your daily. I can tell you that this trend line right here, we outlined, Monday. Really a nice spike low. There was your second test, sort of your third test. I would consider that, maybe even a fourth, and then you finally broke. We retraced, we failed right there at that trend line, and now we're just sort of stagnating in this area. I think that we could be in for a bearish correction. I think that if you're playing trend line reversals, right after that third hit, as soon as we get a close beneath that trend line, you're going to see the market potentially move to the downside. So we're watching that relatively closely on an MT4 platform. Can you take the short right now? I would say, yeah, you probably could. I mean, if you wanted to go ahead and sell, go up to your one-click trading module, click sell, and we just opened a position. And if you're trading on MT5, relatively straightforward, you can see there's your trade manager. We went ahead and just sold one. And remember, these are demo dollars. These aren't real dollars. How could you manage this trade? Our entry point's pretty good. I mean, theoretically, your entry point could have been down here on yesterday's close, but your entry point's not bad. We got a bit of a discount there. Well, very simple. My stop loss goes right up above that little drag and drop functionality. Stop loss goes right up above that swing high. That's a pretty darn good stop. And then where did my profit target go? Anywhere that I want to put it. 1 to 1, 1 to 2, 1 to 3. If this is a reversal strategy, a lot of traders really love smart money concepts. They'd be looking for a target right down at that swing low. For me, I am a much more conservative trader. Y'all know me. You know what I think of 1-to-1 ratios? Love them. I love winning trades. I don't like losing trades. So that's my personality. I like to win as many as I can, and we do our best with our risk management. But that right there could be a trade that you're looking at there for the Euro USD daily trend line reversal. Fascinating stuff. Interesting stuff. All right, we got a lot going on. I'm going fast now, guys. Sorry, I know I'm moving fast, but we got to go. Let me see. David Diak, I got a short on the Euro USD. Do you think it's a good idea to keep it open on the news if it doesn't close before then? Well, I sort of just covered the Euro USD. Remember, if you're in the money, yeah, consider taking a little bit home for your effort here, because this is a big time release. We're going to break it down for you here in a few minutes. But this right here, you could get a reversal based on the FOMC minutes. You could get a reversal. So you want to make sure that you got to remember to trade. Always trade without conflict. Always trade without conflict. And what that means is, if you feel that little man or woman in your stomach, if you get that gut feeling where your gut starts rumbling going, I need to think about taking profits, then you need to take some profits. Now, if your gut's telling you, all right, let's let this ride. I got good solid risk. I'm doing pretty well for the week, the month, and the year. I can afford to let this ride, then let it ride. Because you are in a position, you're in a pretty good position on a short on that Euro USD. You're not in bad shape. The real question is what does this FOMC minutes do to price action? And that's what we're all wondering. We genuinely don't know. You could get very lucky, or you could get very unlucky. That's just sort of the way that the cookie crumbles. And that's, I hate to be that guy, but realistically, we don't know which way this price is going to break out of this. We have no clue about which way price is going to break. Not one. So you got to figure out what you can live with. If you can live with taking a loss, then do it. If you can't, then take the money and run. There's nothing wrong with that. That's how I would look at it. Let me see Hein. Good to see Hein. Hey, Shane, did you get a new camera? Quality looks amazing. Right on. Thanks. Yeah, we're trying to upgrade around here. You're going to see a much different presentation probably in the coming weeks. We're going to be looking to do a lot of things here that just make the streams look better. We've been doing the same format. I've been more about content than format, and trying to make everything look really pretty because it's hard. I mean, technical stuff's hard, but we are going to be upgrading here in the near future. So be sure to check back. But yeah, Hein, we got a new camera. Let me see. Fong, when does this meeting occur? Noon my time, 2 p.m. Eastern. So in about 45 minutes from now. U.S. dollar, Japanese yen. Yes, sir. Absolutely right. We're going to go ahead and take a look at crude oil here for just a second. And then I'll get you right up to your yen. We got a long trade in the yen that just doesn't look very good at all, and I'm sort of avoiding going there because it is kind of depressing. But we are going to go over the trade. We don't lean on the winners, and we don't run from the losers. We lean into all of it. So yeah, we're going to do that here in a second. Want to reach minimum New York session. I don't know, David. I really don't know if it's, I had opened the trade at 116.58. My target's at 115.56 on the Euro USD. I mean, where we trading right now? 116.62. I mean, it's up to you to let it ride, but I probably would scratch it. That's for sure. What about Bitcoin? We're getting to it, Samuel. Don't worry about it. Crude oil updated. Yeah, interesting stuff on crude oil. In any case, crude oil inventories came in at negative 6 million barrels, and that's absolutely unbelievable because we had been sort of on an uptrend here as we go into fall seasonality. Here's the exact report right from the horse's mouth, the EIA. Let's see, third paragraph. Remember, you just run a Google search, EIA weekly crude oil status report, and you're going to get this pop up. All right, and this is just a brief summary. It's a PDF. It's real easy to read. I'm going to show you how to read it. First paragraph means nothing. Second paragraph means nothing. Third paragraph is all you need to focus on if you're trading crude oil. U.S. commercial crude oil inventories, excluding those in the SPR, decreased by 6 million barrels from the previous week. At 420.7 million barrels, U.S. crude oil inventories are about 6% below the 5-year average. That is not good. Total motor gasoline inventories decreased by 2.7 million. Where's our refinery at? Total commercial petroleum inventories increased 4.2 million barrels. Let's see, propane. We're not worried about propane. Distillate fuels inventories increased by 2.3 million. So that suggests that potentially we're starting to begin to build up some gasoline supply, and a lot of that has to do with that summer travel demand dropping. Now, what is the overall impact on your crude oil? We're getting into the time of year where we need to see the growth in the crude oil inventories. If we don't start to see it, then we're going to be in big trouble going into the winter months. This is a bearish time for crude oil. I definitely want to be aware of that fall seasonality, especially after Labor Day. We're coming up on Labor Day relatively quickly here in the United States. After Labor Day, it's pretty bearish for WTI crude. Let me see, Andrea Garwell, correction, gold was a 920 on the 30. I thought so, Andrea. I looked at that. I looked at it on the 4-hour chart, and I said, I don't see a crossover. But we'll look at it on the 30-minute in just a second here. Let's go. WTI crude oil, U.S. oil daily chart. Really a difficult market. If you're losing money trading crude oil, you're not alone. It's been a real challenging, really a whipsaw. It's really since this breakout trend of early August. Most of August has been just not very good for WTI, and that really is sort of the status of oil, of futures trading, especially in the summertime. It's not always great. I don't really like this Fibonacci retracement sequence at all. I think that it's terrible, and this is why we don't do it. We try not to do this when we got choppy price action. I talked about the megaphone formation yesterday. We're starting to see it in crude oil. That's not good. That means that the market's discombobulated, to use a really big word. It's disjointed. People don't know what to do. They don't know if they want to buy. They don't know if they want to sell. And more along the lines of there's no pressure. Nobody's bringing any heat. There's no pressure in this market, and that's really difficult for us to handicap and try to figure out which side to get on. So what we want to do here is we want to go ahead and back up to a weekly and try to get just some semblance of a chart that we can trade. And right there would be your spike high. There's your spike low, something like this. There's your pullback zone, and I outline this really all week long, 64.91, probably 64. You could even sell 64.75s if you get a chance. You may get that later on this week. It really just depends on how exactly energy traders digest what's happening in the Russia-Ukraine and also digest what's happening with U.S. inventories. Interesting stuff right there, but that would be my key level. Let's see. We had a couple of requests. U.S. dollar, Japanese yen. This was our 4-hour crossover from earlier this week, and it is ugly. It is bowling shoe ugly. There is no two ways about that. It is not good. I am not very happy at all with how this performed, but it's not over yet. A couple of things you can do. Number one, I highly recommend stopping yourself out when your stop loss is hit. So if this right here is going to be your stop loss and you do get nailed, that's life. You just get hit and you move on. If you got this one right here, this swing low, that could be your aggregate stop loss. If you want to let this one burn, probably another 100 pips, you can certainly do that. I don't have a problem with that. For me, probably looking at something like this. In my view, the other crossover has set up to the short. That does not bode well. That does not bode well for this trade. So, theoretically, you could exit right now. You said, Shane, it crossed back over. I'm going to go ahead and get out. You could exit right now and then reverse it and go short. You can certainly do that, or you can let this long sort of play out. It really is up to you. I haven't really developed any steadfast rules for the following crossover. In my view, I like to set these trades up and go after them. The reason why I would really avoid flip-flopping, I call it flip-flopping, long to short, is because if you get in that weave type of a situation where the market flattens out, you see you sort of get chopped up. And I don't want to lose any more trades than I have to. So in my opinion, if the market has in fact flattened out, then we may still get a chance to hit our profit target in this trade. I'm not in a real big hurry to switch direction, especially not going into the FOMC minutes on this dollar yen. So I would be relatively careful there if I was trying to make a decision on what to do. It looks to me like it's flattened out. I think I'm going to go ahead and just take my initial beat, which we went long right there, and it looks like it's going to come in and smack us right in the face. And that's life. That's trading. That's what we do. That is what you're paid to do. You're paid, and a lot of traders are paid very, very well because they can take losses and they can move on and they can get into good trades. So if we take a loss here, we're going to move on. We're going to get into a good trade. All right, let's take a look at a few more of these markets, and then we're going to cover the FOMC minutes, get you ready to rock and roll. As far as the dollar yen goes on a longer time frame, I would immediately back off to my weekly, and I would say, okay, what do we got? And the answer is absolutely nothing. This is hard. This is really hard stuff. I'm not impressed at all. We got really a nice rally right up there earlier. Let's see, that was back late July. We went up and hit the 150 mark, but I will tell you this, that this right in here just isn't good to me. Very, very tight, very, very indecisive. I'm not interested. I'm not interested right now. I want to see that these markets have to break, guys, and it's all about the Fed and it's all about their rate situation. You can see right here, even on a monthly, and these white lines, ignore those. Those are our 4-hour trade, but you can see exactly where we are from a macro perspective. You know, what can we do? I mean, you got a nice bounce right there off of 146.68. Beautiful bounce. Is it going to be enough? Is this going to be the bottom of this market? We just don't know. We just don't know. So that's going to be an absolute challenge. Let's go ahead and try that gold chart here just for a second here on the 920 EMA crossover strategy. If you're not familiar with this one, go ahead and check out all the videos and everything you need are all on our How to Trade channel over there on YouTube. I go to my coded 920. I'm going to go ahead and take this gold chart, and we're going to take it down to 30 minutes. I believe we had a good one right there somewhere. Right there would have been, right there on your doji. There's your crossover. You'll see right there. That is actually colored in. It should be colored in. And the reason why it's not is because it's a doji. So there's no body. Typically, we shade those candles. Those candles are shaded in gold when we get a crossover. I'll show you an example right here. But we just don't like something like that. We don't have a body on that candle. So potentially, that was a fantastic trade. Nice bid back really going into that London session. And since then, it's just been a banger. So that's a pretty good trade from 33.23 up to 33.45, something like that. All right, one more. We'll do Bitcoin here real quick. Bitcoin, and then I'll circle back around, and we'll close with gold in the US 30 as far as analytics goes. You've got a lot going here with Bitcoin. Number one, we've got to be bullish. You want to be bullish. You don't want to make a bad mistake to the short side. Now, you're saying, Shane, market's pretty short. It's getting short. And I go, yeah, it is. Yeah, it isn't. I mean, let's back off to our monthly, and you can see what we have. Just really a beautiful, absolute beautiful long-term trend, really beginning in earnest. It began back in 2023 when we just absolutely just made the crusher of all crushers. We went from right down there, November of 2022, 17,000, and now we're up above 100 at 113,000. I don't mess with trends. I follow the trends. It's very important that we don't lose sight of what's happening. The bidders are there. There's no two ways about it. Now, are we getting a correction in August? Yeah, we are. But look, what are we down? We're down 1.63%. That's nothing for Bitcoin. That is nothing for crypto. I heard a lot of talk about cryptocurrencies. We were listening to Larry Fink earlier today, the honcho of BlackRock. Just got, I believe he's been appointed the interim head of the World Economic Forum, the WEF, replaced Klaus Schwab on an interim basis. Fink is a huge crypto person. Now he's in control of the WEF. What do you think happens to crypto prices? We're not done going up. In my view, 105. I would love the washout. We're seeing a lot of retail longs get washed out. I'm bidding any chance I get. I'm bidding retracements. 105 would be great. You got that 13-month EMA down there at 92, 93. That would be beautiful. He said, Shane, your levels are so far off of the ball. What are you talking about? Believe me, when you run into market structure like this, there's nothing to be done. It's Chop City, spike high, spike low, spike high, spike low. It's Chop City. So you've got to figure out a way to trade. Now, we definitely could be looking at that weekly EMA at 111.5 1/4. That's pretty good. What's the low? 112.353. That's a big deal. I wouldn't mind bidding a little 111. This area right here, though, is what I'll be holding out for. Don't be surprised if you see a big correction, especially if the Fed comes off as hawkish. That'll send sellers. That'll send sellers to the market. That's for sure. So that really brings us to the whole point of the stream, is to get you ready for the FOMC minutes now. So there's a lot going on, guys. So let's go ahead and get to it. Let me see. Arlick, new here. Interesting stream. Well, thank you for joining us. We love the newbies. Be sure to ask any questions you like. I'm doing my best. To answer all of these, and I will certainly do this. Okay, we're going to look at gold, Comedy Channel, and DR. I'm going to go ahead and I'll close with gold, and we'll close with the US 30, and then we'll also look at the US 100 as well. Those three, we'll hit those on the way out the door here. The USD JPY is ranging between the weekly levels. Yeah, it's not going to break. Yes, sir, it's tough. It's tough to get these currencies to break right now. Ethereum, okay, hung. I'll look at Ethereum as well. Is gold a buy? Gold's flat. We'll cover it at the end, my hobby. Rabbit Gamer, new view, please. Yeah, news view. All right, guys, let's go ahead and have a look. Bottom line is this. FOMC meeting minutes are coming up in about 35 minutes from now. Now, what the FOMC meeting minutes are, it's a written document. It's a written document that talks about the dialogue in the FOMC meeting room, all right, during the last meeting. So we're going to hear from the FOMC members. We're going to hear from what they said, and they don't just say, okay, this guy said this and this lady said that, or yada, yada. They don't talk like that. They say the committee believes. The committee believes we're going to go into an economic contraction. The committee believes unemployment's strong. The committee believes inflation's coming down. That's the way that they speak. What we're looking for is two things. Now, remember, two things are all you need to know about the FOMC minutes. Number one, we're looking for dissent. I want to hear the dissent. I want to hear committee members want rate cuts now. I want to hear committee members want to hold rates where they're at. That's what we want to hear. If they're knocking heads in that boardroom, that means that there's going to be a greater chance of a rate cut coming our way soon. So that's the first thing, is dissent. And the second thing is we just want to know what's different from the last one. We want to know, what does the committee believe in regards to economic growth and stability? Now remember, the things that go into economic growth and stability are what? Employment, a strong labor market, and that all generates strong output and strong consumption. Okay, so that's really what they're going to be talking about. Household spending, things like that. Is the economy strong? Two things. We're looking for a dissent in the room. All right, we want FOMC members fighting with each other. That tells us that rate cuts are more than likely on the way. That's the first thing. The second thing is the overall strength of the U.S. economy in the eyes of the committee. Those two things are all we're looking for. The rest of it is nonsense. Now, this is clever right here. About an hour after that, you've got FOMC member Bostic speaks, Raphael Bostic from the Atlanta Fed. He's going to come out. He's going to make some comments. Probably going to talk a little bit about the FOMC minutes. Probably going to talk a little bit about Jay Powell being out at the end of the year, and probably going to allude to the fact that potentially wants to throw his hat into the arena to be the next Fed chair. That's big. Don't usually see FOMC members talking right after the minutes. Be ready for some action today. So remember, how does all this impact the Forex? Relatively simple. You've got a dovish. If the Fed's dovish and they say they're going to cut rates, that's going to be bearish for the USD. That means the US dollar, there's going to be more in circulation, and you're going to lose a lot of really clout against some of the other assets. So you've got to be very careful with that. Number two, hawkish. All right, hawkish. If the Fed comes out, the FOMC members say, no, we need to keep rates where they're at. Just leave them where they're at. We're good. We need to bring inflation down. That's going to be hawkish, bullish for the USD, and that's going to be one of those things that you definitely got to watch. So don't mind my pictures here. They're a little bit backwards, but you guys get my meaning. It's going to be one of those things where if we're dovish, risk assets go up, commodities go up. If we're hawkish, what happens? Risk assets go down, commodities go down. That's about all there is to it, guys. All right, now let's talk about what's really going to happen today. Fed minutes can show whether Waller and Bowman had company in favoring cuts soon. So these two folks here have their hats into the arena to be the next Fed chairman or chairwoman. Really, doesn't matter. We've had chairmen, we've had chairwomen. It does not matter from that regard. These folks want to cut rates. They want to cut rates. Fed minutes may reveal support for rate cuts among policymakers. So basically, we're going to see if, okay, this is the last time we hold rates where they're at, and we definitely want to cut. That's going to be the first thing. Labor data supports concerns of Bowman and Waller on job market. Yeah, we've seen some tough NFP numbers. They're going to want to cut interest rates as soon as they possibly can. Inflation concerns persist amid Trump's tariff policies. That last headline right there, we could argue that all day long. I'm not going to. There's really about the only prima facie evidence that the tariffs have raised prices was our last PPI report where we saw big-time growth in PPI. So this is what's going on in the room. This is the news item that's circled today. This is Trump says Fed Governor Lisa Cook must resign after mortgage fraud accusations. Mortgage fraud, considers firing Fed official. These are Fed officials. Now you've got the Federal Reserve. The United States Federal Reserve is all of a sudden caught up in mortgage fraud. What does this mean? Now the fraud may or may not have taken place. I don't know. I'm not an attorney. I'm not a real estate attorney. I'm not any of those things. I'm not a judge. I'm not going to be on the jury. I don't know anything about it. But I will tell you this. It is a full court press right now from the White House to get those rate cuts as fast as they possibly can. One of the ways that they'll do it, they'll put pressure on members, they'll put pressure on Jay Powell, and they'll start suggesting that, hey, we've got to enlist 11 candidates that are ready to replace Jay at the end of the year. So this is a full court press from the White House. No question about it. I don't know. I mean, mortgage fraud, who knows? I don't know. I don't know her portfolio. But I will say this. All of a sudden, you're at about 85% that you're going to cut interest rates. 15% says they're going to stand pat. That's actually grown since our last NFP report. That's interesting. So what are we expecting today? We're expecting to hear a lot of dissent in that report. We're expecting to hear a lot of things alluding to rate cuts are coming. The cavalry's coming. So we've got to understand exactly what we're looking at. That's potentially a bearish market driver for the U.S. dollar. And in my view, it's coming right now. Today, be ready for the rate cut headlines. Rate cut, rate cut, rate cut, rate cut. Be ready for it. It's coming. It's coming in about probably 45 minutes from now. Remember, they're going to release that document in 30 minutes. It's going to take a little while for the market to actually read through it and digest it. A little bit faster with AI now, but it's going to take a minute. So don't just dive in on the first headline you see. Give this some time. You don't want to be trading it right away. All right, so right here you go. There's your current target rate. What I'm always interested in is the last one of the year. Where do rates come off the board at the end of the year? 4.25 to 4.50, and you can see right now we're pricing in about an 84% chance of at least a half-point reduction of the federal funds rate as we roll deeper towards the end of the year. That's all there is. All right, guys, let's go ahead and do it. We've got wow, everybody wants to hear about gold. All right, we're looking at gold. We're going to look at gold right now. T. Marina, interesting to see where crypto will fit in with the World Economic Forum sustainable goals. Oh man, the ESG goals. That's a good point, T. Marina. How does cryptocurrency factor in to supposedly a group that is incredibly environmentally savvy, yet the amount of energy that it's taking to boost AI and crypto? There's no way that you can say that cryptocurrencies and Bitcoin are green or even remotely related to any sort of green energy policies. It takes a lot of windmills to build a Bitcoin, and those folks know it on that board. So what they're doing is, I agree, dovish, hawkish. I am dovish right now, Farrell. I'm absolutely dovish. Is gold a buy or a sell? We're looking right now. Are you bullish or bearish for the news today? I'm bullish for stocks, and I'm bearish for the U.S. dollar. But I got to see the verbiage. It should be rate cut mania. If it's not, let me see, Artie, let's not kid ourselves that inflation won't be sacrificed at the altar for the sake of employment. Absolutely, Artie. Remember, guys, the FOMC, the Federal Reserve, the Swiss National Bank, any bank you want in the world, they have two jobs. That's it. They have two mandates. Promote maximum employment, support pricing stability. That's it. Two things. That is it. And Artie's absolutely right. They're going to support economic growth in the face of inflation. That's always been the way. They're going to say, okay, listen, we're going to go ahead and give you growth. We're going to give you more money. Unfortunately, it's not worth anything. That's the reality of the situation. And that's the way that central bankers have been doing this for the last 50 years. Is it right? Is it wrong? It destroys savers. I could tell you that. All right. What's the probability for gold? Bullish or bearish? All right, Rabbit. I'm looking right now. Okay, here's the gold. Sip of coffee. Throat's a little dry. Okay, here's the way I see gold. Relatively straightforward. Nothing has happened. This is a weekly chart. Absolutely nothing has happened really since we got that big rally in late April. The rest of this, we had a little bit of chop in the subsequent month, in the following month. But right here, what do you got? Flat. Been absolutely flat. These weeks Sure. Fantastic day trading. They're pretty good intraday trading. I took a pretty good hit back in July. I got caught in a sweep, a late sweep, a midday sweep that came out of nowhere in the futures market. It hurt, left the mark. I still remember it. I remember it. But this right here, it's all bullish, bullish, bullish. So the first thing that I would like to do is point out the key level at the top side is 3,500. The entire market is looking at two things: 3,500 at the top side, and what do you got right there? 31.32. That's going to be a long-term monthly retracement, and I can show you exactly where I got that retracement from my charts. Now, that's not those levels probably not tradable for today. So let's do something a little more pragmatic and practical. Let's go right down to the weekly. What would be a key level? My weekly EMA, 13-week EMA, 33.21. That's big. Okay, we bounced off of that. So what we're going to have to do here, number one, we recognize market state here on gold. Okay, we understand what's happening. We're completely bullish. I'm bullish. This right here is what we would call an ascending wedge, or a bullish pennant, if you will. But this is an ascending wedge on the weekly. Now, it's just a bullish pennant or a bullish flag on the monthly, but definitely got to respect the top side of this. Respect the top side of this and believe that something's going to break eventually. That's pretty much what I'm waiting for. I'm waiting for the big breakout towards 35 and more than likely up to 4,000. I think that's going to develop, and if we start cutting interest rates by a half point or 3/4 of a point, we're going to be on a rocket ship to the moon. So we got to be very careful with what we do to the short side of this market right now. Now, that's the broader perspective. I have a bullish bias. My weeklies and my monthlies support my bullish bias. What can I do on an intraday basis right now to trade gold? Well, Andrea had a great idea. She did a 30-minute chart. You can see right here. Here was our doji. Right there was our 30-minute 920 crossover. That's beautiful. If you got that trade, you're still long. Now, if you back off to a 4-hour chart, what can you say? It looks like we're potentially going to get a bid signal here. 4-hour gold, 9 EMA crosses over the 20. We're looking to buy it. Simple as that. What are you looking to get right there? We're working on a crossover. So if it doesn't cross over in the next 23 minutes, which it doesn't look like it will, but it may, if this is a crossover, you're going to go ahead and bid that market. That's key. Does that coincide with a dovish Fed? Yes, it does. Remember, dollar falls, gold's going to rise. Why? It's an inflationary hedge. We all know inflation's way too high. The Fed does not seem to want to do what it's going to take to bring us back pricing stability and give people back their savings. They don't want to do it. So what does that do to gold? People start saying, well, I'm going to buy gold then. Instead of being in cash or bonds, I'm buying gold. Well, this 4-hour chart, if this sets up and we do get the 920 crossover, that's probably going to be a position long. Be looking for that trade idea probably tomorrow. I'm watching gold relatively closely. Now, back to sort of the way that I would do it, as far as my own personal strategy, definitely bullish across the board. Now, the problem that you run into and where most traders go wrong is they don't really understand that a market's not a market is not a market. This is a daily chart. We're flat. Nothing's happened. These are real tight ranges. That was a decent sell-off, I guess. But this right here, we're up about 0.9%. We're also right up at key topside resistance. Bollinger midpoint, my Bollinger Bands, Bollinger midpoint 33.47, and then also my EMA 33.46. That's a big-time zone. And we're butting up against it right now. So what I would say is that if you break above that zone, somewhere right around 33.46, you close maybe or get up right up in here, 33.47, you definitely got to start looking to the bullish side of this market. However, that is staunch resistance. Price is what I would call it a non-committal area right now, trading right at my Bollinger midpoint and my moving average on the daily. And take a look at your Bollinger Bands. They're flat. The market's flat, guys. So, I mean, if you wanted to sell right now, I could say you could sell right now. If you wanted to buy right now, I would wait until you get established somewhere above this area, this 33.47, somewhere in this zone, and then we could look to go long. Let's take this right down to a basic 30-minute chart. Trending. What do we want to do? If you're holding something, you probably would be holding longs, but I would be very careful entering a new trade. If we do break up above this area right in here, maybe 33.47, I mean, take a look at our intraday high. This isn't an accident, 33.50. Maybe play a breakout above 33.50 if you want to go long, but otherwise, you don't have to force the issue here. You don't have to force the issue. I personally am waiting. I'm waiting for this market to move. It's not impressing me. I want to see a big break up towards 3,500. I know exactly how to trade it from up there, and I know how to trade it from down here at 31.50 as well. Right now, sort of no man's land. Very easy to get chopped up. But as far as a short-term trade idea, 4-hour chart, 920 crossover, watching that closely. Watching that closely. So let's see. Already sell gold. It's possible to sell it. If you wanted to sell it, just stop yourself out up over 33.50. You don't want to be around if the market breaks 33.50. We could definitely run and run high. Let me see, bro. What do you think, Manuel? Bro, what do you think? Bullish or bearish for Bitcoin? I think it's going to be bullish for Bitcoin. We hit those levels just a minute ago, but the key levels, I'm buying retracements. Would love to bid right down here. 105 would be great, but even this 13-week moving average would be pretty darn good as well. That would be a pretty good bid. Something about there. All right, I promised a look at U.S. equities. We're going to look at the U.S. 30, and then we're going to go ahead and look at the U.S. 100, and we're going to go ahead and sign off. Right here, you can see that these weekly charts really comes down to compression around the $45,000 level. Russia-U.S. summit, that's big, and then the Ukraine-EU-U.S. summit Friday and Monday. Very, very tight trading, guys. Very, very tight. I wouldn't have a position. I wouldn't have a dog in this fight right now. No way. You can see that the dojis are starting to be apparent. That tells us that the buyers and sellers are balanced, that nobody knows what's going to happen right now. For me, 45 is everything. Give me that definitive break above 45,000, and we will buy retracements all day long. But if we don't get that, then you sort of got to say, well, maybe we creep back down in here for a while. US 30 is really hard to trade. I'm wishing I hate to wish anybody luck because it sounds condescending, but if you're trading the US 30, best of luck for you. Best of luck for you. Absolutely, Gordon, you're welcome. Great Britain Pound USD, already hit it, Ants. I hit it right at the beginning of the stream, so go back and check it out. But that right there is interesting for the US 30. All right, last one was the US 100. Then we're going to go ahead and sign off here. Let's see right here, daily chart. You see nice, big. I would much rather be trading this than the US 30, to be brutally honest with you. So we just outlined the key level, the big-time level for the US 30, and it's 45,000. There's no question about it. What do you think the key level is for this one? 25,000. We're not there yet. We could get there easy though. So that up there, I'm watching that closely. As far as I'm concerned, I've had a bullish bias towards the NASDAQ for a long time. I really don't see any way around the growth, and we're seeing it just over and over and over again. It seems like every single dip. This was a significant dip back there in early April, and it's just been a rocket ship since then. A lot of people made just a fortune on the options plays there, and that's great. So where do you want to buy from? That's really the only question. Where do you want to buy from? For me right now, I would be looking at my 13-week EMA, 22.5, somewhere in there, 22.575. That could be a great bid. And then I would also back off to the monthly, something like this. This is the chart that I'm interested in. This is the one that'll give us a very, very good bid on a deeper correction. If we do get a deeper correction, 21. Now it's a couple thousand points off. We'll be watching that very closely, probably September, October, November. That level right there, that could be fantastic for us, especially maybe the Fed doesn't cut rates. That'll send the US 100 toppling. As far as what can we do potentially on an intraday basis, 30-minute chart. Let's go right to our US 100. You can see right here, this is what we had earlier today. Nice big sweep lower on the open. On the U.S. Open, there was your crossover, so your short is still in effect. If you wanted to take the short, you certainly could. I wouldn't. Personally, I wouldn't. Would I want to buy from here, though? Not really. I would be on the sidelines for this U.S. 100 right now. I love the market structure of the monthly, but we just don't always get to trade those. A lot of times things are just way, 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 way too far away from us. So what we do is we have to take it down to, say, our intraday time frames. And still, this is – if you're trading, intraday, you've got to say, okay, big dump, went down. Now we're trading back into the center of this range. A trading strategy that you may be able to execute here in the next hour, a couple hours before the U.S. close would be this. There's your New York high. There's your New York low. You could fade the top. You could sell your New York high and play a retracement or reversion back in here. And you could buy the New York low and play the reversion in here. I'm not sure that we go much of anywhere. I have a feeling it's going to be rate cut, rate cut, rate cut, rate cut, rate cut, rate cut. That's what I would say. Jason, what's your analysis on the Euro USD? I covered it at the beginning of the stream, guys. Let me see. Deanna, Jasmine, buy or sell on gold? Neither. That thing's flat. Neither. All right, guys, I'm going to go ahead and sign off here for a minute. As far as gold goes, we're watching that crossover on the 924-hour chart. If we do get that crossover after the meeting, I have no problem buying it. Fantastic. Big shout-out goes to Andrea. Big shout-out. That was a fantastic spot on the 30-minute gold crossover. That was good stuff because you had the ability to buy that gold on the crossover right before the London Open. Pretty good stuff. Pretty good stuff. I mean, that's how you trade that. That's how you trade that. All right, everybody, I'm going to go ahead and let me see. Okay, you buy? Let's see, dude. No, I'm not buying. I'm going to buy after the 920 sets up. This is our official call, all right? Everybody's talking gold. You guys want gold? This right here, this was the trade, okay? Okay, that trade's over. That's gone. Now what we've got to do is figure out how to trade gold. 4-hour chart, highly recommend it. Highly recommend it. 4-hour chart right there. We get that crossover developing maybe in the next maybe probably going into not the London, but probably the Tokyo session. If we can get into the Tokyo session with a crossover, a 9 EMA over the 20 on a 4-hour time frame, I don't just become confident there. I become probably arrogant because that right there, you see we were almost right down into oversold territory on the RSI, and now we're rotating back up into really the money zone. This could be pretty good stuff. I'm watching this one closely, that's for sure. All right, everybody, I'm going to go ahead and sign off for today. It was a fantastic session. Thank you for all of the participation, guys, in the live chat. It's just absolutely blowing up. Absolutely love it. Guys, get on over to How to Trade. Check out the daily trade ideas. We've been running pretty well in there, and we typically do run pretty well in there, but we've got a lot of folks that are watching here inside of the trading room. It's a great community. Remember, if in fact you are interested in getting into the markets and really with any meaning, switchmarkets.com. Check it out. They've got zero commission accounts, tight spreads, and they do offer you the flexibility and the ability to trade anything you want, thousands of markets, CFD products, and everything. If you're in the United States, unfortunately, you won't get to visit Switch. Head on over to How to Trade, send me a private message, and I will talk to you a little bit about Forex brokers and futures brokers, ones that I have experience with and ones that potentially could get you started on the right track. All right, everybody. Thank you very much for joining me today. Have a fantastic session. We're going to be back tomorrow with an exclusive event for the Switch Markets community and the How to Trade traders. It's going to be the Switch Markets live trading webinar. We're going to talk about the Piranha strategy tomorrow. That one's already scheduled over on the Switch Markets TV. Go ahead and check that one out on YouTube. All right, guys, I'm out. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.